from Africa, but across the globe. We have participants from 30 countries in total registered for this event, with the top participating countries being Nigeria, Kenya, South Africa, Egypt, Tanzania, and also participants from the United Kingdom and the United States. We can all agree that 2020 has indeed been a challenging year, considering the COVID-19 pandemic, which has thrown Africa and the rest of the world into a cloud of uncertainty. The pandemic's rapid cross-border spread necessitated the adoption of stringent social distancing measures and lockdowns to curb its spread. These have had severe consequences on economies around the world, particularly in Africa, where many countries lack the fiscal buoyancy to provide sufficient stimuli to cushion their economies from pandemic-induced downturns. The economic impact of the pandemic on Africa is apparent. In the context of the health impact, however, the prognosis for Africa in the initial instance was quite dire, based on observed weaknesses of the healthcare sector within the continent. As it turned out, for reasons being studied, Africa has proven resilient, as the expected doomsday scenario has not yet panned out. The challenge for Africa, regardless, remains that of inclusive growth. As a continent, we need to lift the populace out of poverty and demonstrate to the world that Africa is still one of the few remaining growth regions on the globe. To achieve this, there's a need to move forward, to be more forward-looking and make plans to harness our economic strength and address our economic weaknesses. And as a region, this will enable us to transition from our current economic lows to desired heights. This, I believe, our panel of experts will throw more light on in today's discussion. Before I conclude, I must also applaud the role played by international financial institutions like the IMF, the World Bank, and the AFDB in providing balance of payment and fiscal support to the region thus far, as well as coordinating negotiations with relevant creditors to grant debt reliefs to distressed economies. This, we believe, could restore macroeconomic stability in the region in the near term. Once again, I would like to thank you, our distinguished participants, for taking out time to join us in this conversation, where we discuss how to shape the future of Africa as a region. I also want to specially thank our keynote speaker and panelists for honoring our invitation to come and share their insights on this platform. We look forward to your insightful contributions. And with these thoughts, let me once again welcome you all and extend to you my best wishes for a successful and fruitful session. And at this time, I will hand you over to our moderator of today's discussions, Mr. Boasin Omofaye, who is the Senior Consultant for Africa, News, Media Markets and Intelligence, UK. Mr. Boasin Omofaye, over to you, and thank you very much.
Thank you very much, Damilola of Vertiva Capital. I have the singular pleasure and honor of welcoming all of you today to this very important Africa Macroeconomic Outlook. We understand it's a very busy time, quite a whole lot of events taking place Pan-African-wise. So we appreciate each of you, our panelists, making the time to be here with us here on this Vertiva engagement. We will ensure that we keep to time and ensure that we have a very insightful and comprehensive engagement so that we all benefit, not just as panelists, but participants and broadly speaking moving forward. Thank you very much, everyone. Let me just go on straight and introduce our chief speaker for today. Our keynote speaker is Akib Aslam, who is the Deputy Division Chief of the Regional Studies Division, African Department at the International Monetary Fund. Akib Akib was worked previously in the European and Fiscal Affairs Department. And before joining the IMF just about 10 years ago, he also worked at Goldman Sachs International. So he's Wall Street savvy, by the way. So you understand that he's also been with the Bank of England. So he also has a bit of central banking in him and a UK government economic service. Thank you very much. His research works include applied macroeconomics and econometrics. Please give a warm welcome to Akib Aslam. Thank you very much for being our keynote speaker. We would like him to speak and give us the main thoughts for this event. But just before you do that, Akib, just give me just a minute to make a quick introduction of our panelists. I think it's very important that we know the company that we keep. And so let me just quickly introduce, being gender sensitive a little bit, I'm going to start with Musokwe Arubai, who is an economist with Vetiva Capital Management. She's had experience in analyzing sub-Saharan Africa, including Nigeria, South Africa, Angola, Kenya, and Ghana. She's got experience in emerging economies and market research, modeling, macroeconomic analysis. She's worked with CSL stockbrokers, and she's Broad Street savvy when it comes to Nigeria's financial market. Musokwe, thank you very much for coming through. I'll also introduce very quickly Dr. Atef El-Shabrawi. I don't know how to, he has a very impressive CV, so I'm trying to squeeze it together. He's currently the Professor of Innovation and Entrepreneurship at EJUST and World Bank Advisory to the Ministry of Social Solidarity for the Egyptian government. He's a global innovation and development finance leader, more than a quarter of a century experience in shaping and managing entrepreneurship, MSME banking, Islamic finance, social innovation ecosystem, and his work very variously within the Middle East and North African region. Thank you very much, Dr. Ate, for coming here. Then Ms. Chedza Madzima, the lady from Southern Africa, a global head of operational risk research and leads the Fitch Africa's research team at Fitch Solutions. That's a Fitch Group company. Chedza has areas of specialization in business environment analysis, policy risk, macro data analytics, and she's been with Fitch Group for 5 years now, featuring on a whole lot of regional and global news publications. My next panelist is Anwar Hassoun. Is joining us from Paris today. He's got about 12 years, more than 15 years of experience in the fieldwork of financial markets, 12 years with international rating agencies, namely Moody's and Standard & Poor's. He's garnered experience between the Middle East, North Africa, and West African regions. And for about 3 years, he worked with the Bank of Tokyo, Mitsubishi UFJ, as the head of research and strategy for Middle East. Currently, he's the chairman and CEO of West African Rating Agency and sits on the board of Analytical Credit Rating Agency. Thank you very much. Where is Delvin? Yes, Delvin. Thank you so much. It's good to have you as well. Delvin Dalrymple is the Vice President, Senior Credit Officer in the Sovereign Risk Group. Kevin is the head analyst for portfolio of sovereign and supranational ratings in sub-Saharan Africa and has got over 25 years of macroeconomic and public policy experience. Thank you so much, all of you, for coming through on the show this morning. And I think we'll want to appreciate your experience and bring all of this to bear on this conversation. Let's give the floor now to Akib Aslam of the IMF to give us a keynote address. Thank you, everyone. And thanks for coming through. Of course, quickly, our poll question, just before we take this. Akib, give me a few seconds. I'm just going to be paying for extra time I'm taking on you. So where's the poll question? I think we just, that came up just a short while ago. Okay, that's which regional economic bloc do you think will lead in Africa's recovery in 2021? We have North Africa, Southern Africa, West Africa, and East Africa. Oh, how do I vote? Let me keep my vote. Akib, you have the floor. Let's listen to you first.
Thank you very much, Boasim, for the very warm welcome. And thank you also to Vetiva GBS and Frontier Africa Reports for the kind invitation to speak at this event today. I'm just going to share my screen now with so that everyone can see the slides that I'd like to be presenting from today. Hopefully you can see the presentation now on your screens. So this morning I'm going to sort of present what the IMF produced in October. In particular, we're going to focus on this sub-Saharan Africa and the regional economic outlook for that region, and the impact of the pandemic on the region's economies, and the various implications that we at the IMF see for the region's policy choices and outlook. So we will, for example, just have a quick look at health developments. We will look at the impact on the region and these outlooks and policy implications. So starting with health developments, I won't take too long on this because many will be very familiar. We just wanted to highlight, as many know, the differences between the regions across the world in that sense. What we're looking at on the left-hand side is the number of COVID cases per million of population for advanced economies, sub-Saharan Africa, and also Latin America and the Caribbean. As Wasson and Damilola mentioned, actually, the region has been quite fortunate that the pandemic started later than elsewhere. And so far, the incidence of new cases has been relatively modest compared to other regions. Advanced economies appear to be at the peak of their second wave. Latin America continues to be struggling somewhat to turn the corner on this first wave. And the spread of the virus continues to remain much more relatively subdued in sub-Saharan Africa. But our view at the IMF is actually that we don't want to be too complacent about this. First, as the experience in the other regions suggests, resurgence is always possible. And as the chart on the right shows, limited testing capacity could mask the true scale of the pandemic in the region. And even though testing has increased substantially between March, April, and October, November, it's several multiples higher. As you can see, relatively, it's from a very low base, and the volume of testing in the region does continue to lag the rest of the world quite significantly. And the reason why we also are taking this very cautious stance is that once we look at the actual diversity across the region, there has been huge divergence in these epidemic dynamics. South Africa, for example, which is the first peaked line here, the sort of darker blue line, essentially peaked in per capita terms at around the summer in this sense, and infection rates have since come down. But not all countries have followed the same timings in that sense. Some countries such as Angola and Cabo Verde, for instance, have never really left their first wave and have seen steady increases in the number of cases, while Kenya and Uganda appear to be experiencing their second waves, for instance, now. So we're sort of very wary of these health developments, and we keep them inevitably very much at the forefront of our mind when we're developing the outlook and the policy recommendations. So that was a very quick look at the health developments. Let's review the impact on the region that we've been tracking so far. So clearly this near synchronized lockdown around the second quarter globally has led to huge disruptions in economic activity. And what these three charts I'm showing you now, we're focusing on first travel and then trade and commodity prices. So like in many other regions, travel restrictions and border closures brought inbound flights to a near complete halt in the region. They are starting to recover in recent months, but are still far below what we've seen before the crisis. And this has inevitably very much impacted those tourism-dependent economies in the region. The second chart in the center of the slide sort of highlights the collapse in trade as well. And export volumes in Africa and also the Middle East experienced some of the sharpest declines in recent history, even larger than the decline seen during the global financial crisis a decade ago. And finally, on the right, we've seen the impact on commodities as well, particularly oil, which dropped sharply at the onset of the crisis and further depressed activity as well as revenues. Now, on the financial side, we've also seen impacts on inflows as well. The left-hand side chart on this slide is giving sort of currently the view for remittances at the moment. They are expected to be lower by a certain amount than they were in 2019. This is inevitably a huge concern for the region, given that remittances have surpassed FDI, as many know, and official development assistance in recent years, and are essential for those countries with non-market access. But we're very wary about this because in recent monthly and quarterly data, there's more of a mixed picture. Inflows dropped by around 24% in the first half of 2020 for Nigeria. And monthly flows, whilst they dropped 15% year on year for countries such as Kenya and Cabo Verde in April, they have subsequently recovered since then with positive year-to-date growth. And meanwhile, the Gambia, for instance, has been recording record inflows. So it's still, the jury is still out on remittance flows for the region, so to speak now. But on average, given Nigeria's sheer weight in the volume of remittances in the region and given their drop, this is why we see this forecast fall in remittances in 2020 relative to 2019. And on the right, we sort of want to highlight the fact that on capital flows, outflows from emerging and the frontier markets in the region they did surge at the onset of the crisis as spreads widened quite sharply. Between February and March in particular, to the order of $5 billion left the region. But since June, inflows have tentatively resumed with about $1 billion flowing back into the region, but there's still a net outflow as a result. So where do these developments leave the region so far, at least for 2020? The chart that I'm showing you here is a chart of region-wide GDP growth for different groups. The category on the far left is the average for the entire sub-Saharan Africa, and the remaining sections of this chart are looking at the growth forecasts in 2020 for different subsets of economies, such as oil exporters, other sorts of resource-intensive countries, and including tourism-dependent economies and frontier market. So as of now, and we are obviously revising these forecasts in real time because we will be issuing a new set of forecasts early next year. But as of October, the region was forecast to contract by an extraordinary, actually, 3% in 2020, which is the worst contraction in record. This was also around 7 percentage points below our forecasts just 12 months ago. The largest impact, as you can see on the panel second from the right, has been on these tourism-dependent economies, such as Seychelles, Mauritius, the Gambia, Cabo Verde, Comoros, which are down by around 17 or sort of over 10 percentage points, compared to last year. And inevitably, given what we just saw now in the change in commodity prices, the fall, oil and non-oil commodity exporters are expected to be hit hard with an average contraction of just over 4%. Respectively. Growth in more diversified economies, for example, Cote d'Ivoire and Rwanda, will actually slow significantly, but on average will still remain positive in the region as well. So that's an important sort of silver lining. The other detail to draw attention to is the fact that this drop in GDP growth is going to potentially translate into quite large per capita income losses in the region, unfortunately wiping out some of the hard-won progress that we've seen. So, hello? Could you hear me now? The chart on the left plots per capita growth in 2020 and the number of years of income gains that countries that are plotted here will potentially lose as of 2020. And the size of each circle is proportional to the country's population. Now, what this chart is telling us is that around 50% of the population in the region will see on average a 6% decrease in per capita income growth, and unfortunately will lose more than 5 years of income gains this year. And on the right-hand side, we can look at the cumulative decline in per capita GDP growth, and we can see here that the sub-Saharan African region does actually see a much larger per capita loss in GDP growth than other regions such as advanced economies and all other non-sub-Saharan African emerging market and developing economies. And inevitably, these setbacks are going to make it harder for countries in the region to reach their longer-term development goals. So, moving on to the final section, just to think about the outlook and the policies. What does this mean going forward? Now, under our baseline at the IMF, the recovery is still expected as of October to begin next year, but it will be quite prolonged and quite uneven. Now, the region as a whole is not expected to return to 2019 output levels until well into 2022. While for some of the region's largest economies, real GDP won't return to pre-crisis levels until even later. Now, our core assumption under the baseline is that there will be no repeats of the types of lockdowns that we saw earlier this year. But of course, these projections are subject to considerable uncertainties, and these uncertainties are indeed sizable and remain tilted to the downside. Now, for example, new outbreaks could derail the recovery. And if we were to see a second global outbreak even next year, with associated financial tightening and so forth, we could see a few additional 1.5 to 2.5 percentage points drop in GDP growth next year as well. And as you can imagine, this would actually push the recovery out even further. And as I said, these forecasts are going to be incredibly sensitive to other key pandemic-related assumptions, such as vaccine distribution and all these sorts of factors as well. The other sort of element to point out on the outlook is that this slow recovery that we're projecting is actually in part shaped by the fact that many countries in the region have limited fiscal space, which is constraining their ability to increase health and social spending to mitigate the impact of the crisis and support their economies. So the policy response, as you can see on the left-hand side chart, has been relatively constrained compared to other economies. In particular, fiscal deficits in 2020 are significantly less than what other countries have been able to afford, and will continue to remain less than other regions going forward as well. And given that many countries have limited capacity to take on more debt, it means that fiscal deficits have to return that much faster or have to reduce that much faster than in many other regions. And the right-hand side chart attempts to summarize this by showing that the fiscal withdrawal will help advanced economies stabilize their debt dynamics going forward. But in fact, it's going to be even more extreme potentially for emerging markets and developing economies and sub-Saharan Africa, precisely because of these constraints. Now, with these limited resources at policymakers' disposal, structural reforms are inevitably going to be key in supporting the recovery. Now, many of these reforms were already priorities even before the crisis, but they're needed even more urgently than now. And these will very much determine the shape of the recovery. These reform priorities include, as always, domestic revenue mobilization, developing social safety nets to help offset the poverty and inequality that we're seeing as a result of the crisis, expanding connectivity and closing the digital divide to boost productivity and efficiency, and also improving governance, transparency, and accountability, inevitably also to ensure that public resources are going to those who need it most, but also to improve the private investment climate. And the shape of the recovery will also depend quite importantly on external financing, and the ability to implement these reforms will indeed depend on external financing. What this slide is just quickly sharing with all of you is that essentially what we're seeing right now is that we estimate that the region's gross financing needs are projected at around $900 billion for the following 4 years, for this year and for the next 3 years, of which just over half are actually accounted for by external debt amortization. Now, we're all familiar with the debt suspension, the debt service suspension initiative initiated by the G20. So far, this has actually only contributed around 0.3% towards these financing needs thus far. And even taking into account private inflows and various other inflows into the region, there is still a potentially large financing gap that could range anywhere between $130 billion to $410 billion over this 4-year period. And inevitably, this gap will remain sensitive to the ability for these flows to actually materialize over the next few years. There is obviously some, despite the doom and gloom, there is good news, of course, as well in the region too. And one thing that we would like to stress is, as we said, the need for continued governance to help secure this financing that's very much needed. And indeed, we are seeing that many countries, as part of our programs, as part of their own reform measures, are indeed actually implementing reforms that go towards better governance. The map on the right just highlights those countries which have made additional commitments to governance measures under the emergency financing that we've been providing. And these relate to all sorts of measures, including publication about procurement, ex-post delivery reports, and audits of spending. So to conclude, and apologies if I've gone a few minutes over my allocated time, there's a lot to say about the region. This is sort of very much the shape of what we see right now, in a sense. So we'd like to leave you with a handful of key messages, in particular that the region, obviously, as we all understand, faces a very difficult recovery with some key downside risks. When it comes to policies and in the context of the pandemic, our key priority or our key advice and the first priority remains to protect lives and livelihoods. But beyond that, countries will ultimately need to place their fiscal balances back on a more sustainable path, but without jeopardizing longer-term growth. It's this infamous balancing act. And reforms to boost growth and resilient recovery are needed now more than ever. And of course, one important point is, as we just made in the previous slides, is that these policy efforts will require significant additional external support. I'll stop here and thank you very much for your attention. I look forward to the forthcoming discussion. Thank you.
Thank you very much. Thank you so much, Akib. Very exhaustive, and to put all of that together must have taken a whole lot of time. Thank you so much. We appreciate that. Just a quick question, Akib, before we go to the panelists to deliver, make their presentations. Just one quick question. If you have to prioritize revenue mobilization, social protection, digitalization, transparency, accountability, the whole need for more funding and financing internally and externally, and better governance. If you take 1, 2, 3, what are your top 3 points that you think fiscal authorities on the continent need to work on very quickly that will have a whole lot of connecting impact, a knock-on effect on the others?
Thank you, Boss. And I think that's a very good question, and inevitably a very difficult question. So and I think that what you said at the end is very important, which is that actually most of these policies, it's hard to prioritize because all of them are needed simultaneously in that sense, most of these policies that we talked about. Now, if we were to think about the importance of, let's say, because there's short-term urgency and slightly more medium and longer-term urgency, these policies such as improving digitalization are slightly longer term endeavors. Those that require infrastructure investment. Those are things which actually will take some time to sort of bear fruit. So if we were to think about the shorter and medium term within the next year or so, next year or two, probably domestic revenue mobilization, improving social safety nets, and really bolstering governance. Those 3 are essentially the 3 policies which will not only on their own be quite important to, for example, governance, to indicate and also incentivize investment, both foreign and domestic as well from the private sector. Domestic revenue mobilization is essential because going forward, countries cannot be reliant on grants or debt financing. So being able to repair the tax base and essentially put in place valuable and actually quite pro-growth tax structures are very important as well. And of course, the need to reinforce social safety nets. There are, unfortunately, as we've noted, the World Bank has also documented a number of people that have been deprived of opportunity. We know that sort of employment opportunities are so important given the youth demographics in the region, and education and all of these things are essential. So trying to improve social spending, and also sort of ensuring, as we said, the priority of, until the vaccine is widely available in the region, having these social safety nets in place are paramount as well for the region. So I hope that sort of went some way to answering your question.
Yes, it does. I'm sure when we talk about better governance, we're looking at the elections in Ghana, for example, largely hitch-free, very quiet, and all of that. And I think that's will resonate in some of the discussions this morning. Thank you so much, Akib, for that keynote address. Wish we could all give you what you call a digital applause for what you've done so far. But let's move to North Africa. Of course, Egypt always says where it all begins. So I don't know, that's the advert on CNN, so where it all began, talking about the pyramids and what have you. So Dr. Atef El-Shabri will be talking to us, economic advisor at the World Bank and one of the key consultants to the government of Egypt. Dr. Atef, I can see the first page of your presentation. You're ready to knock this off, don't you?
Yeah, okay. Good morning, everyone. I'm really happy to be with you for the second time and this the second webinar we have, and I'm really appreciating the presentation of Mr. Akib, who made my job very easy. I guess that he gave us a kind of a journey regarding the whole structures of the changes we are witnessing during the COVID-19 and after. I wouldn't be very long. I will take about 5 minutes. So I will make a small trip regarding the microeconomics changes. I mean, and I will focus on North African countries. As you know, all North African countries are an area where it's shaken by kind of political instability and some conflicts in areas in Libya and some instability in Algeria and as well as an area where economically known by certain activity like tourism activity, which is extremely active in Morocco, Egypt, Tunisia, not much in Algeria, but we have also the remittance makes an important resource for Egypt, Tunisia, Morocco, informal economy, agriculture, and oil and gas producer, Egypt, and we have seen that the growth in 2020 was little. Egypt was leading the row in the North African countries, and that didn't stay for long. So Mr. Akib gave the overview of the COVID-19 impact. I will just go quickly in the 3 points: that financial impact, economic, and social. I wouldn't make much of the description. He gave really a good presentation on the detailed. So we know all that since the first wave of COVID-19, we thought that everything is ended, and we are now facing the second wave and the impact of that. Mr. Hakim, I guess Hakim gave updated figures regarding the estimation of the global loss of the growth and the GDP, and as we have here, we still have that kind of debate in numbers. I mean, on all our presentation today, we'll see different numbers because we have IMF, World Bank, and we have certain local or regional organizations like the African Development Bank, like ESCWA, and those are giving figures which are not contradicting, but with little margin of difference. I will stop 1 second with John Corhans, who has a kind of, that's what we are thinking now. We did that lockdown, and we know that the business is stopped, as Hakim mentioned, that we wouldn't expect another full lockdown. But let's say that the economy is not just a light bulb. We will push on the button and the economy will restart. We are facing that kind of the after shutting down, and he's simulating this by the nuclear reactor, which needs time to react and to restart and to operate. And this is very important because what's happening, in fact, this is a sample estimation regarding the loss or the expected GDP loss. I guess Akib gave this kind of picture, and diversity of the impact on the countries in North Africa depends on the socioeconomic and the structure of the economy of different countries. I mean, the maximum here we have at Lebanon, which Lebanon is not African, but unfortunately they are suffering the most, minus 26% expected in 2021. So I mean, we have kind of promising figures from the African Development Bank, expecting that countries like Egypt might be still having a positive growth. However, in some countries we are most hit, like Tunisia, from the tourism, and Algeria, and here even Morocco is also headed. So I will go quickly in 2 minutes in the what are the most important microeconomics impact of the COVID. That's first the recovery of SMEs. We have here a very worldwide study regarding the impact of SMEs financing institution, where banks itself is already suffering from, as I mentioned here, reducing inflow and customer and decline in sales and revenue. That's SMEs organization itself is hit. Not only the SMEs it's themselves. We have different. We need to revamp the startup ecosystem. You know that we have loser and winner. Not all the economy is losing during the COVID-19 because we have certain businesses who are doing well. I mean, on contrary, like medical, IT, everything, food, beverage, and things which we didn't use it as before. Well, now, however, in some sectors we are really need to get a revamp plan and quickly restructure. We need also to revamp the marketplace and work, where we have now, you know, the job creation will be linked to the technology technology and digitalization adaptation. You know, half of our work, I can consider half, but it might be longer or shorter percentage of being done by digital. We are now online, and we do a lot of people are working from home fully or partially. So that kind of the new era of work is needed also to be adapted, because we will not work as before. Unfortunately, the recovery of the human development, we have this recent report of the UNDP showing that the drastic loss of the human development index. You see, this is very down long column of red one, which is 2020 Human Development Index, global index, which shows that a lot of countries now will suffering not only from getting more people in poverty, but also in kind of deprivation of the planified activity of the governments, which lost the income, the revenue of the government, so they can't spend any more money on the expected project or any planned project. Recovery of tourism sector in North Africa, we have a huge problem, because you know that this is from Egypt to Morocco. We are depending largely 26% in Egypt might be a tourism, between 20 and 26% of income come from tourism, and tourism is giving money for everyone. So we have here a drastic reduction of the arrival and practically stopping the arrival. So we have to think about North Africa needs to reshape their scenario of recovery from protecting. We are stopping little of lockdown, but we have to recover and look for the retool of the new world, where we have this, what we call it after COVID, or the post-normal. I would end just by saying that, as Mr. Akib mentioned, that the COVID crisis will have long-lasting implication. I mean, we are talking now in the middle of the, in the end of the first year of COVID-19, in the middle of May, we said, okay, the recovery will be the first quarter of 2021. And now we are in the few days and will be in the first quarter of 2021, and we don't see any recovery. So, I mean, it might be long-lasting implication in the region and the old world. And the way we do business, this is important, because the microeconomic changes which we have seen now and we are witnessing, and the change might last and might change a lot of things, provide with many lessons and experience that have to affect our both substance of our economy and the way we do and conduct the process of the whole structure. Many things have to be rethought and redesigned and repositioned. I guess this is a golden opportunity for African countries who are trying to revamp and to catch up with the winners, that everyone now is stopped to think and to rethink. So the North African countries and the whole Africa might have the tremendous opportunity to develop the local value chain. The World Bank has a report in 2019 mentioning that the global growth will be in value chain, global value chain. And suddenly we have COVID-19 and we rethinking that, okay, the local value chain, particularly in agriculture and animal production and things like this, might be really a promoter for the growth. The digitalization opportunity and African youth are really a well-developed, for being a programmer, a coder, and things like this, and developing more agile SMEs. We are shifting from the informal, and suddenly we find, and everyone is informal currently. Last point, that I feel that Africa has a tremendous opportunity to develop the agricultural sector, which COVID-19 showed that the most damageable, in fact, problem when we have the lockdown, that we couldn't have the supply, and particularly countries were importing most of what they eat. They found themselves in a trouble. So I end here, and thank you for your time, and I might get a question later on. Back to you, Babson.
Thank you so much, Dr. Atef. Thank you so much. Very interesting perspectives and an overview of the North African space. I have just one quick question for you, Dr. Atef. We know you're pressed for time. Each day, I'm a journalist, so and each day I go on television and I check Pan-African news. It seems to me that folks in North Africa seem to be getting a whole lot of envelopes from the international foreign investments than the rest of the continent, in particular Egypt, Morocco, for example, whether it's from European Bank for Reconstruction and Development, or from Germany, or from France, or from the World Bank or the IMF. I just wonder, how come that North Africa, signposted by Egypt, seem to be getting these huge, rich inflows so far this year, even under the pandemic, than the rest of sub-Saharan Africa. What's going on right? What's going on well in North African region, perhaps from Egypt to maybe Morocco, for if you want to give us a bit of that.
Yeah, I guess if we don't talk on politics, I mean, politics has an important influence on that, because if you look for the foreign direct investment in Egypt coming in year 2014, 15, and 16, you will find a lot of that FDI was a kind of support from certain GCC countries. And if we look now for the situation, we'll find that Egypt, Morocco, Tunisia, Algeria are the frontal area of the European Union, where we have problem of illegal immigrants, and where they think that by developing the south of Mediterranean, perhaps they might have more peace. So let's say that from one side, we have this political arena and turmoil, which makes for the Egyptian or for the Tunisian, for the Moroccan kind of opportunity that if you stabilize our countries, it might be less, you know, that appetite for the youth to leave and either immigration legal or not legal. This is one thing. The second thing, if you look for the world doing business report of the World Bank of last 5 years, just before COVID-19, you will find that some countries like Morocco, like Egypt, have done a lot of progress, sudden progress, like Senegal, for example, in Africa, like Nigeria. Some countries were doing sudden progress in 2-3 years. I mean, so if we look before the COVID-19, we have a country like Morocco, were doing extremely well with the biggest port in the Middle East and the Mediterranean. So their appetite to absorb foreign investment. Egypt has launched a lot of big, what they call it, national projects, like the new Canal Suez, the new duplication of the Canal Suez, the huge logistic area. So from one side, you have the political turmoil, which makes it interesting to stabilize the area. From the other side, those countries were doing little better than others in terms of the readiness to absorb and to get ready for the investment. And certainly the global political, I mean, our friend from the IMF, and I'm not representing in this discussion the World Bank, but you know that it is the structure of the where we invest in these big countries might be working for the North African in this area. But I feel that also some of African countries are doing extremely well, but perhaps are doing well in a separate way, not in a collective way.
Mm. Thank you so much, Dr. Atef. We appreciate your thoughts. One part of the continent whose impact will be felt strongly on the African continent is Southern Africa. And if you use South Africa as a signpost on what we learned in the last couple of months at the peak of the pandemic period, is that whatever happens in South Africa will have a whole lot of blow-up effect, not only on Southern Africa, but all the way up to East Africa. So we'll allow Chidza Madzima to speak to the most industrialized economy on the continent, which was South Africa. Yesterday, the third quarter GDP came in about 66%. That's just straight out of the blues. Chidza, give us not just South Africa, but the Southern African community looking at agriculture. You look at Mozambique, then you look at Zimbabwe and Zambia. Of course, two different issues there from Zambia's debt issues. Now the IMF officials are in Lusaka meeting with the authorities. According to the latest report, Dr. Abebe Selassie and his team are already in meeting with Edgar Lungu's, President Lungu's administration. They will be concluding their meeting today for an intervention that Lusaka has requested the IMF to step in. So it's a whole lot of big story around the Southern African space. Bring us up to speed on this, Chidza. Thank you.
100%. Thank you. And thank you for inviting me to this platform. Good morning, everyone. I'm just going to drill down from the top level and get down to the country level views that we have. So overall, the year 2020 was very challenging across the world. And as long as a vaccine is not readily or widely available, even though at Fitch Solutions, we expect global growth to come in at 5.5% in 2021, we believe that uncertainty will still linger and a full economic normalization will take several quarters to achieve, especially for emerging markets and developing economies. And this is particularly true for Southern Africa, where we expect regional growth to come in at 2.4% next year. And that's almost half of the global growth average and well below the wider SSA average expected growth print. So the region, as you said, will largely be weighed down by South Africa, where we expect just above 2.2% GDP growth in 2021, following an 8% contraction this year. And in 2021, we believe that large segments of the population and the business sector in Southern Africa will still be quite negatively affected by high levels of unemployment and economic and political uncertainty. So overall, it will take years to bring growth back to pre-COVID-19 levels. And while growth will be sustained by rising global demand for minerals and agricultural commodities across the region, especially on the back of a strong China or Asia recovery and the gradual sort of normalization of domestic economic conditions, it's likely to remain structurally lower for longer, in contrast to the region's historic performance over the last 5 years. And equally, while we're also quite broadly bullish on commodity prices, they are unlikely to reach the highs that we've seen in the first half of the previous decade, which will also act as a further constraint on regional growth. So the region actually needs more new job-creating growth drivers urgently. And just kind of give an overview, the weakest performers for 2021 will be Zimbabwe, where we expect real GDP growth will tick in at 1.3% year on year next year, followed by Angola, Zambia, and South Africa that are teetering at around 2% growth for 2021. And at the same time, Mauritius and Botswana will likely see the strongest recoveries in the region, and then the wider sort of Southern African region, where growth will likely reach about 5.4% for Botswana and around 6.7% for Mauritius. But of course, this is on the back of improving external conditions and successful vaccine rollout. But again, this is not a single year crisis. As Akib highlighted, there are also several downside risks, and this crisis could lead to quite difficult policy trade-offs in the coming years as governments seek to balance social stability against fiscal consolidation and debt stabilization, and at the same time, try to increase investment through structural reform implementation. And investors are likely to be more concerned over the rise in political risk and debt loads in these markets, given the sort of weaker macro fundamentals, weak institutions, and still sluggish reform momentum, and kind of space to provide fiscal stimulus as the region's economies begin their recovery will be very limited going into next year and the years following that. And we expect governments will prioritize fiscal consolidation, ensure debt sustainability. And while the global hunt for yield suggests that demand for emerging market assets will hold up to a certain extent, we believe that investors could start to be more selective, which could put pressure on markets that are actually slow to reduce spending and pursue reforms. So high fiscal deficits will continue to drive up public debt levels across the region, especially in Angola, Zambia, Mozambique, and South Africa in the near term. And this will act as a further constraint on long-term growth that, especially given that additional expenditure will be diverted towards sort of debt service costs rather than being used to boost consumption or investment. So we'll likely see a drawdown in CapEx and infrastructure development across the region. And now more than ever, governments need local and foreign investors to drive future growth, and it'll take decisive action and implementation of business-friendly reforms to really get the private sector on board, for example, by strengthening public-private partnership frameworks, strengthening legal environments, kickstarting privatization drives that have all but stalled across the region, and really offering the markets bankable, realistic infrastructure projects, because there's a huge infrastructure gap across the region. Just quickly on monetary policy, we'll likely see several markets in Southern Africa adopt a less dovish policy trajectory moving forward than we have seen previously, and most central banks will likely hold, and in some cases actually start to hike rates in 2021 as growth picks up. and particularly if food and soft commodity prices rise faster than anticipated. And we're also particularly bullish on global oil prices going into 2021, of which all of the region's economies are net importers. On the banking side, banks will be relatively cautious about lending to the private sector, especially as asset quality is deteriorating and, of course, stimulus measures dissipate. On currencies across the region, while a lot of currencies across the region remain broadly undervalued, where there's some modest upside for the rand, for the wider region, and especially for Zambia, Mozambique, Angola, and to a greater extent Zimbabwe, these countries remain highly vulnerable to major sell-offs and risk-off sentiment, particularly if the governments show very limited progress on fiscal consolidation, debt transparency, reforms, and especially in the case of Zimbabwe, foreign currency regime and monetary policy normalization. So greater than expected currency depreciation would also pose upside risk to inflation, which also further weaken the economic prospects for the sub-region. And lastly, there will be elevated risk of social unrest given high unemployment, and cuts to public sector jobs, subsidies, social transfers, or even increases in tax will likely act as a catalyst for unrest in countries such as South Africa, Namibia, Zambia, and Zimbabwe. And already in South Africa, of course, as we all know, reform efforts have encountered some opposition. And the municipal elections upcoming in July next year will be a key litmus test for the Cyril Ramaphosa administration's reform credentials. And in the case of Zambia, we could also see an uptick in unrest in response to the dire state of the economy and what many, especially in urban areas, see as an increasing effort to narrow the political space ahead of the 2021 election. So overall, quite a downbeat outlook for the rest of the region. Of course, there's some modest upside post-2021 with the coming online of Mozambique's LNG or massive LNG projects.
Thank you so much, Shiz. I was just nodding when you're talking about the outlook for 2021. I'm sure the Zimbabwean finance minister is not likely to be pleased with you because Kube is looking at between 4 to 7% GDP growth next year. That's what I think about 2 weeks ago. And we all say, wow, that's going to be out of this world. Where would that come from? You're talking about 1.3%. But again, that's still positive growth, by the way. So whichever way. But my quick question really is, what will anchor this growth for Southern Africa? Will it be agriculture? Will it be commodities, which of course you have very rich in Zambia, Zimbabwe, South Africa, and a few others? Then you look at the agri-rich states, including Zimbabwe as well, and Malawi, and a few others within the SADC region, and be a little bit further out within the COMESA, which is a bit more broader. What would be the underpinning here?
We believe that the key anchors of growth, of course, will be, just sort of broadening improvement in the external demand picture for a lot of the countries in the region. Of course, for countries, such as South Africa, the agricultural sector will be quite a key driver. Our outlook for commodities quite bullish, especially for a lot of the key exports for the region. And especially when you consider a lot of minerals of the future that are coming outside of the region, when you look at things like lithium, cobalt, etc., and other rare earth minerals. When it comes to mining sector performance, as opposed to agriculture, I think the picture is quite mixed across the region. In the case of Zambia, we could see a few wobbles in terms of copper production and copper output. Of course, there's increasing levels of government intervention and increases in punitive taxes on the mining sector. So, of course, investors are kind of adopting a wait-and-see approach in terms of what happens with Zambia. In the case of Mozambique, we also see quite a tepid recovery on the back of, again, a still downbeat outlook for coal exports. But again, the agricultural sector should pull through for the country. And of course, more broadly across the region, private consumption levels are likely to pick up with the easing lockdown restrictions. But of course, again, like Akib highlighted, they are quite significant downside risks stemming from a resurgence of second or nth wave risks. And for the bright spots, I suppose maybe looking a little bit more longer term, Botswana, and maybe if South Africa is able to restart its reform trajectory, I think investors will also be looking at more labor intensive sectors, and of course, sort of building up agri-sector value chains. And this kind of dovetails with the coming online of the Africa Continental Free Trade Agreement. So in terms of regional integration, we believe that due to the comparatively more industrialized nature of Southern African economies, they could, in the longer term, benefit quite strongly from that. But yes, in the near term, it's very commodities driven.
Very commodities driven. Thank you so much, Chids. Let's move from Southern Africa to West Africa, and I find it a little bit difficult here to decide who should speak first between Moshope and Anua. Nigeria has the population, the demography in West Africa, is the big brother West Africa. But then here we sit Nigeria in the middle of a whole lot of French-speaking West African countries: Cameroon, Chad, Niger, Benin, Togo, and Burkina Faso. So, and with Ivory Coast sitting down there as another big brother for the French-speaking West African countries. So I'm finding it difficult to decide. So I'm going to lean towards Anua to hear from the French-speaking West African economies. When you look, Anua, thank you so much for coming through and being part of the panelists today. When you look at the Anglophone West Africa, that's what we're talking about. We're talking about, let's get from Anua first. Let's speak some French. Let's get some French into it. Let's get a French connection, as they put it. What is that, the title of a movie?
The French Connection, yes.
Yeah, the French Connection. Yeah, I remember
Absolutely.
that. I'm still old school, by the way, but then I remember some good old movies. Anua, you have the floor.
Thank you very much, Bosun. Let me be bold, if not blunt, because we don't have much time. Let me start with the health considerations, the health issues. They are completely irrelevant in French-speaking West Africa. The number of casualties is ridiculously low. That's the starting point. It doesn't mean that everything is rosy. In French-speaking West Africa, we're talking here about the countries, the 8 countries of WAEMU, the West African Economic and Monetary Union, where our rating agency, WARA, is active. And the reason why the health issues are not that prevalent in our region is that we are not globalized and we're not urbanized. The pandemic is one manifestation of globalization and urbanization, and we're not. And therefore, if you look at the numbers, we're not that hard hit. Now, paradoxically, our economies the 8 economies are extremely dependent on global markets. And therefore, let me give you some numbers. We went from plus 6% real GDP growth in 2019 after a decade of almost the same numbers to -3. So we lost 9 points of GDP. These are numbers, but at the end of the day, look at the people behind the numbers. We used to run a ratio of poverty of 25%. The ratio of poverty will be rising to 35 to 40%. So if our governments do not act quickly, and I would encourage everybody to look back to the presentation of Akib, page 14 on governance, and I will be talking about this in a moment. If we don't act quickly, things can go wrong. Follow me if you will. First, poverty will lead to social turmoil, and social turmoil will lead to political trouble. And our politics is bad. We spend a lot of money on our security, and we spend a lot of money on our elections, and we spend a lot of money on a number of non-productive spendings. So if we do not recover fast enough and people do not go back to work quickly enough, things could go sour. So this is, I would say, scenario number one. But scenario number two, the numbers suggest, from a microeconomic perspective, these are not reflected in GDP numbers yet. But in our ratings, we are touching upon subjects like transport, like telecoms, and so on. And we have been seeing some quick recoveries, especially in the following sectors: retailers, telecoms, some industrial assets, agriculture. This is going fine. The rest is suffering a bit. So the bottom line out of it is that our expectation is that by 2022, by the end of 2022, our economies will probably pick up, simply because we export simple stuff. We export agriculture goods, cotton, nuts, cocoa, coffee, gold, and it is expected that by volumes and prices, we will be in a position to recover by the end of 2022. If the recovery is too slow or not big enough back to the 6% real GDP growth, poverty will have an impact on our society, and our society will be politically troubled. That's the bottom line we have in our region. We are fairly optimistic because people have started to go back to work. The lockdown has not been as difficult in West Africa than in more advanced countries. And therefore, we see activity picking up probably by the middle of 2022, but certainly not after that. So that's the picture in West Africa as we speak. And our governments are very much aware after this wake-up call to fasten the pace of structural economic policies to transform the primary sector into the agro industry, from where industrialization can pick up, but this is a long shot. This is the picture, Boson. Thank you very much for giving us the time.
Thank you so much, Anouar. When you speak about French-speaking West African countries, history is, if history is anything to go by, in terms of the civil wars in Liberia, in Sierra Leone, in Cote d'Ivoire, we don't want that region to pop up anytime soon. So Akib spoke earlier about social protection. I know it is one region that has a lot about trade. So we're looking at the new AFCFTA. What are you seeing on the ground, Anouar, in terms of social protection program? Are you seeing economies or governments doing some of the social program interventions? Like, for example, in Morocco, additional $400 million is coming through from the World Bank to support social protection program. Are you seeing this happening on the ground? Do you think the continent is ready for the new trade deal, AFCFTA?
No, it's not happening. We don't have the means to do this. Social protection is mainly done at the micro level, at the family level, and at the community level. The magnitude of social protection programs in West Africa are very low. This is not, and actually we don't need it. We don't need it immediately. We will probably need it in 2021 when people will have to be supported to go back to work. That's what we need. But the means allocated to social protection are very low.
Thank you so much, Anouar. We appreciate your point, bringing everyone in the room up to speed on this. Thank you so much. We appreciate that. From French-speaking West Africa, let's just talk about English-speaking West Africa. Musakwe Rubai, thank you very much. From Vetiva Capital, you have the floor.
Thanks, Basin. Let me just get my slide up so I can carry everyone along in the conversation. Thank you once again. Just much like every other region that other speakers have spoken about, Anglophone West Africa has felt the heat of the pandemic, on multiple fronts. Not only does the sub-region have a high degree of trade linkage to Asia and Europe, but it is also largely resource dependent, except for Gambia, that is tourism dependent. Nigeria dependent on oil, Ghana dependent on gold, crude oil and cocoa, Sierra Leone on iron ore and diamonds, Liberia on gold, crude oil and iron ore. So through the external sector, the pandemic's adverse effects were cascaded to other macroeconomic sectors, including the real, monetary, and fiscal sectors of the region's economy. Shocks to global commodities prices and tourism meant two things for the region: a sharp drop in government earnings amid mandatory lockdowns that slowed economic activities, and a sharp drop in FX earnings that had implications for reserve accretion and exchange rate. The Naira has been the least resilient in the Anglophone West African region on account of the 8% devaluation of the INE window FX rate year to date to curb pandemic-induced depletion of the reserves and satisfy preconditions to access concessional flows. Although lower tourism receipts spurred weakness in the Gambian dalasi, record official remittance inflows absorbed some of the shock, while higher gold prices and an early Eurobond raise cushioned some of the cedi's weakness amid interventions from the Bank of Ghana. The appreciation of the outlier, which we can see, the Liberian dollar, has not been fundamentally driven, but it's been fueled by an artificial scarcity of the local currency. Well, we're all aware that the Liberian economy is a dollarized economy, so there's been a scarcity of the Liberian dollar in the FX market. Going to how the economies have performed thus far, economic activities are slow to record lows in the region, just like every other region. Both Nigeria and Ghana saw record contractions of 6.1% and 3.2% year on year in their respective GDPs in Q2. A subsequent contraction of 3.6% in Q3 ushered Nigeria into its second recession in 5 years. In line with the growth trends in Nigeria and Ghana, the president of Gambia has also expressed his non-optimistic outlook for a fall in Gambia's GDP to 2% this year from an earlier projection of 6%. The slowdown in economic activities has caused the region to be rife with unemployment, and we have seen a jump in Nigeria's unemployment rate to 27.1%. And just like Chidza said, once you have high rate of unemployment in an economy, you're likely to record civil unrest, and which we saw a bit of that in October with the protests that we saw. Inflation outcomes across the region have been mixed thus far, with the moderation in smaller countries supported largely by lower pricing for fuels in their markets, while the pass-through impacts of currency pressures on consumer prices has outpaced gains from deregulated fuel prices in the region's larger economies. In Sierra Leone, for instance, the Ministry of Transport reviewed the prices for different transport routes lower in response to the reduction in the pump price of fuel. This would have had a moderating impact on prices in other economic sectors, supporting the cooling of inflation in their economies. Nonetheless, inflation has breached the central bank's targets, with Nigeria being the farthest away from its targets. Both fiscal and monetary policy have delivered coordinated responses to cushion the impact of the pandemic, and responses across the region have been largely the same. Monetary policy rates were lowered in line with space available to countries, except in Nigeria, where the central bank looked beyond inflationary pressures to reflate the economy. Reserve requirements were lowered in the Gambia and Ghana to increase liquidity. Liberia restructured borrowing terms, suspended POS transaction fees, and increased transfer limits on their mobile money transactions, while the CBN reduced the interest rate on its intervention facilities, all in a bid to increase financial liquidity and stimulate economic activities. On the fiscal front, the region's governments looked beyond existing fiscal constraints, like Aki pointed out earlier, and have chosen to spend their way out of the downturn by making welfare packages available to their citizens, from subsidies reduction in Gambia and Nigeria to cash transfers in Liberia and Sierra Leone, to slowing down on non-priority spending in Ghana and the Gambia. The primary objective of fiscal authorities has been to uphold citizens' welfare. Pressure on government's finances has caused them to borrow to finance this necessary emergency spend, even though some already have their debts at unsustainable levels. So looking into 2021, I see a return to growth on the back of 2020's unfavorable base and interventions by policymakers, though recovery may not be broad-based. For instance, recovery in the agriculture sector may continue to be constrained by insecurity, as is with Nigeria, and adverse weather conditions such as droughts in the Gambia and floods in Nigeria. The manufacturing sector may also be constrained by the usual suspects, weaker currencies, power challenges that translate to higher operational costs, depressed consumer wallets that translate to lower demand for manufactured products, and so on. In the mining sector, there may be constraints in the mining sector on the back of policy deficiencies that are limiting growth stimulating investment. Case in point, Nigeria and Sierra Leone's iron ore industry. On the flip side, progress with a medical solution to COVID-19 pandemic bodes well for tourism in the region, especially for countries like Gambia, a country like Gambia that is tourism dependent. The transport, leisure, and entertainment sectors could also rebound strongly as tourism restarts. But overall, recovery is expected to be sluggish because the main drivers of growth are not likely to see a strong recovery in 2021. ICT and financial services are also projected to have a good year. That'll be all from my side. Thank you.
Thank you so much. We appreciate your your presentation, giving us that helicopter view of English-speaking West Africa. I think everyone is looking around some level of recovery by 2021. Nigeria says it's going to be earlier in the new year. Some folks believe it's going to be later in the year. Whatever happens, we hope this will definitely hit the ground running. We'll take Kelvin Darimpo, Vice President, Senior Credit Officer in the Sovereign Risk Group. And with all that you're doing, we thank you very much for sticking around for this. Speaking to East Africa, I'm sure, I wish I could put a few Kiswahili in here in terms of, but Asante, as I'll say that when you do a Karibu to start with, welcome. So let's get you speak to us with East Africa. I'm sure you have this big view about what is going on in there and what the opportunities are for an inclusive post-COVID-19 recovery. By the way, I enjoy the East African tea, whether it's in Rwanda or from Kenya or from Tanzania. I've had footprints and I think I've tasted tea across the region. That thing I can raise a cup of tea too. Congratulations, well done. Go ahead.
Thank you very much, Bosun, and good afternoon and good morning to all the panelists, wherever you are. From an East Africa perspective, the 5 countries that I'm going to be focused on are the ones that we rate in that region, which would be Ethiopia, Kenya, Rwanda, Tanzania, Uganda. And for the year 2020, as everyone has said, starting from Akib and all the other panelists, it has been a pretty tough year for these countries because of the COVID-19 pandemic. Particularly East Africa, there was also the locust infestation in Ethiopia, Kenya, and a bit of Uganda. And that kind of presaged what happened with the COVID-19 after that. So there would have been a slight downward drive in GDP before the pandemic hit. So therefore, there would have been a little bit of a softening of the economy then. But looking ahead for real GDP growth, what we see is that this region was essentially a very high growth region, in excess of 6% growth in many of the countries. Almost all of them had very high growth. And what we saw during 2020 was kind of a halving of that growth. So many countries were within the 3% of GDP growth rate, which is not bad given the pandemic. But we see a gradual uptick. We anticipate that there will be a gradual uptick in 2021 as these economies recover. These economies are relatively broad-based, largely agricultural, some dependent on tourism like Tanzania and Kenya, but Kenya, fairly sophisticated, financial sector, banking sector will provide some level of resilience. At this point in time, we see Kenya hovering around the 5% mark, Ethiopia still relatively flat around 2-3%, Tanzania around 4%, Uganda around 3%, and Rwanda ticking along around 6% growth for 2021. Moving along to institutional and governance strength, something that we look very strongly at in our firm, Moody's. What we want to see, or what we normally look to see happening, is what is the policy response? What has happened? What is the response and to the approach for 2021? What we see in this region is that there's largely a kind of a weak fiscal policy and effectiveness situation there. And that kind of constrains what sort of policies these countries pursue. At this point in time, one of these countries have an IMF program, which is Ethiopia, and they're implementing some reforms, and we anticipate that these will proceed. And in cases where deficits have started to become a bit higher, we anticipate some commitment also to fiscal consolidation in these countries in Eastern Africa. And then we come mainly to where a lot of the impact had occurred in the Eastern African countries, which is on the fiscal side. What we've had is a tradition of very weak domestic revenue mobilization, the ability of these countries to raise revenue. And it's hovered around less than 20% of GDP, which is relatively low. And in some countries, even lower than that, like 12 to 15% in countries like Tanzania and Ethiopia. And many of the reforms that I spoke to not so long ago will be geared towards raising the level of revenue. Because if the level of revenue is not raised and the expenditure continues to rise, deficits will expand. And that gives us pause when it comes to issues of debt sustainability and issues related to debt affordability, rising interest payments, and that will become a challenge for these countries going forward. And we see that quite a bit emerging in these Eastern African countries. If we skip along to another area which we are very, very focused on, which is the susceptibility to event risk. And under this category, other speakers spoke to issues relating to political risk. And we see this in a very heightened way in the Eastern African region. What we see is at the top of the list right now is Ethiopia and the challenges that they're having in the Tigray region. We're seeing even before that some of skirmishes in some of the other provinces and the other regions of Ethiopia. And this in and of itself is not the principal concern for a rating agency. What we are more focused on is how this political risk has a knock-on impact on foreign direct investment and the ability of the country to proceed with its reforms. And therefore, we look at that closely. And also, what is the impact on social risk? Whether it leads to humanitarian issues, as we've been seeing in the Tigray region, refugees moving from Ethiopia over to Sudan. Those are the sorts of issues that would put significant pressure on a sovereign. We also see as well, as part of our framework for susceptibility to event risk, we see government liquidity risk. How is government able to fund itself and finance itself? Is it domestically through rolling over T-bills, or whether or not it's going to be some sustained level of external financing, either through the IFIs or through bilateral partners. We saw some easing, as been referenced in previous presentations, to the DSSI, the G20 Debt Service Suspension Initiative. But that's only provided a small amount, as Akib said. And therefore, what is going to be more important, what is going to be happening in terms of potential relief from other, from bilaterals, other bilaterals on an individual basis, or any sort of, sustainability on the part of financing from the IFIs as well. And we have to look at that, where these countries are obviously going to be eligible. And then the private sector, which is not covered, of course, under the DSSI, will be a big part of the picture as well. And then we look at banking sector risk, which for some countries, not really such a big issue in the East African area, except probably for Kenya, which has a substantial banking and financial sector. And the very last thing we want to focus on is external vulnerability. What is happening on the external sector side? We've seen the paring back of exports, obviously because of the lockdown, with the broken, chains of supply across the world, and also a dampening of demand for imports. But once that starts to recover, we will see a bit of a widening on the current account deficits. And therefore, I think as a whole, the picture is mixed. But I think the base that the East African countries were coming from was relatively high in terms of growth and some of the other indicators. So the issue of picking up from where they left off before, although not reaching the pre-pandemic levels, would be something that we would expect. I think I'll stop there, Wilson. Thank you very much.
Thank you, Kelvin. Thank you so much. We're getting into, we thank you for your presentations, all our panelists. We want to take a few questions to Kelvin, to Damilola and Mosokwe for your presentations, Mosokwe and Kelvin. But very quickly, some of our participants are asking questions, and some comments are coming through. So we want to take everyone on board very quickly. But I'm going to ask very quickly, Kevin, what do you think the recovery handle will be for East Africa? Will it be trade? Will it be this Pan-African trade? Will it be commerce? Will it be, what will it really be? What will it be the anchor of growth here, all things considered?
Well, given the broad range of commodities and services in the Eastern African region, I think it will be a mix. I think that in terms of Tanzania will be looking, of course, to open back quickly and be able to get their tourism back up and running. Of course, this is conditioned by the wide availability of the vaccine and that sort of thing. Ethiopia, to some extent, has the mixture of tourism, but they're also focusing quite a lot on services. They open up the economy, trying to diversify their telecommunications, trying to get their manufacturing up and running, looking at electricity, selling electricity cross border. In Kenya, I think the financial sector will continue to be key for them. And Rwanda has been doing quite a successful job in industrialization and trying to do a lot more in terms of exporting very key, like battery minerals and those sorts of things that the world has a great demand for. So I think it's going to be different things for different countries. And Tanzania also has some potential on the mineral side. They have gold, they have a lot of untapped resources. And I think that they're going to continue to tap into some of those things. So it's going to be different for different countries, but I think the potential growth is there.
I think they said, never waste a good crisis. Akib, I have one very big question for you at the end. I'm sure you've listened to other panelists, and we'll take a few more questions. My quick question for you, not right now, but I want you to have it at the back of your mind, is what will be the takeaways here for the IMF? You're putting together a review. Your department, the African department, are going to put up a review of Africa's situation earlier in the new year. So what will be your takeaways from this webinar in terms of the outlook, inclusive post-COVID recovery? In terms of inclusiveness, I know I spoke about that earlier, why the authorities need to put good corporate governance, social protection, social safety net, together. And I think it's not just in French-speaking West Africa. I think it resonates across the continent. Sub-Saharan Africa, Mushopo touched on that with the envelopes that the Nigerian authorities and a few other countries are doing, Liberia, in Sierra Leone and in Gambia. Then of course, Morocco is also doing that as well in the Sahel region. Let's get on to some of the questions for the panelists. I'm going to take the first question straight now to Mushope. This is one of the questions from Efe Ogunaya, and it says, what GDP levels do you expect to see in Nigeria, Ghana, and Cote d'Ivoire for 2021? And what would drive that?
Okay, I think I'll leave Cote d'Ivoire for Anwar. Okay, well, in Nigeria, we expect a recovery of about 1.5%, between 1.4 and 1.5%. Just like I said, the favorable base from this year would be would do a lot for recovery next year. Also, the bright sectors, like I'd mentioned, are actually smaller contributing sectors. We still have challenges with the agric sector, manufacturing. We're not particularly optimistic about recovery in the oil sector as well. So sectors like transportation recovering next year, ICT continuing its strong growth next year will bode well for the recovery next year, but it's still going to be sluggish because the real growth drivers are still going to be constrained going into 2021. For Ghana, we expect continued resilience in the agriculture sector, a recovery in trade, logistics, and financial services to board the economy to by 2.59% in 2021. This we will thrive on better containment measures that will propel recovery in the transport and storage sectors as well, which has been disrupted by stringent lockdowns in the first half of 2020. Like one of my fellow panelists said, we're not likely to see those stringent lockdowns anymore, should there even be a second wave in this part of the world. So yes, we're largely optimistic about recovery, 2.59 in Ghana and about 1.5 in Nigeria.
Thank you so much, Mushope. One of our participants also asking question. I'm going to throw this to both Cheza and Kelvin in East Africa, but I think they seem to have a whole lot in terms of cross-border trade. So William Herrera is asking, in the light of the various economic trading blocks that currently exist in Southern Africa and East Africa, how would you think, what will enable cross-border trading as well as freedom of movement for member states? Who wants to go first? Cheza, you want to go first on that?
Great. I can go first. Thank you for that question. I think in terms of kickstarting the Africa Free Trade Area, I think there'll be few winners across the region over the next decade. A lot of the benefits or the initial benefits of this trade agreement will largely fall on countries such as South Africa, your Egypt, your Morocco's, and your more industrialized countries across the region, as well as those with strong transport links, in terms of hard infrastructure, as well as, comparatively less red tape when it comes to trade procedures and governance. So in terms of that, I think when you look at Southern Africa, East Africa, going all the way up to Egypt, I think trade will largely be concentrated there, at least for the first decade. But broadly across the region, of course, it's not tariffs that were a big barrier to trade, it's non-tariff barriers to trade. So your Central Africa's, large parts of maybe the Sahel and West Africa will likely miss out. And of course, even within Southern and East Africa, this sort of trade growth will be led by bolstering agri value chains, agro-processing across the region, and not so much in terms of complex manufacturing across the region due to the infrastructure gap when you consider electricity risks as well as skills gaps, and of course the more worrying undercurrent of the widening digital divide across the region, and of course between the region and the rest of the world when you consider how far Asia and Europe are. So yeah, there will be quite, there will be winners, but very few in the near term in terms of this agreement. And I mean, all in all, if you look at intra-Africa trade, it stands at around 15% compared to around 60% in Europe, 50% in Asia, and even 20% in Latin America. So there's still quite a long way to go. And in order to bolster trade moving forward, of course, governments need to do a lot more in terms of upskilling their population, improving digitization, as was mentioned before, and also implementing, critical reforms that at least help to reduce risk perceptions for foreign and especially local investors that are sometimes ignored when it comes to talking about, sort of reinvigorating growth and kickstarting investment in local economies. So really unlocking those local capital markets will require quite strong reform efforts on the part of policymakers and very strong collaboration with the private sector across the region.
Thank you, Cheza. Anwar Hassoun, do you think the common currency and common central banking position for French-speaking West African states will be something of a game changer for this region when we take over the EFCFTA January 1st, which is just about 3 weeks down the line? The EFCFTA have put up a trading platform already and all that. Do you think common currency within West Africa would be an advantage?
Yes, it is. For an indirect reason. The very fact that you share a common currency is that you share common institutions, and then it's therefore far more difficult for countries to compete in ways that are not acceptable. And in addition to that, the coordination of the political agenda and the economic policies is better. We have seen this in YMU, and we will necessarily see this in ECOWAS, in the broader West African framework. The only thing that is worrying is that the current YMU setup is built around countries that resemble themselves quite massively. I mean, what's the difference between Senegal, Burkina Faso, Mali, Guinea, Togo, Benin, and Ivory Coast? I mean, all the countries have the same economic structures. The only difference is size. Ivory Coast is, Côte d'Ivoire is 40% of regional GDP, Senegal is 20%, and the rest of the countries share the remaining 40%. Now, with a wider monetary union and banking system, welcoming countries like Nigeria, for example, which has significant different economic structures, there might be more difficulty to absorb asymmetrical shocks. So is it an optimal monetary zone? We doubt it very much, only time will tell. And there is another issue, is that the convergence of macroeconomic indicators should be high. The fact is that in terms of debt, in terms of public deficits, in terms of inflation, current West African countries in the French-speaking areas are very much the same. When you take the macroeconomic indicators of Nigeria, which is an oil economy, an oil exporting economy, and when you join them to French-speaking West Africa, there is a major difference. So it will require some time to converge. And convergence is something probably necessary for the ECOWAS monetary union to be successful.
Thank you so much. So talking about a similar situation in East Africa, Kelvin, when it comes to the shilling, although you have Tanzanian shilling, the Uganda shilling, the Kenya shilling, but again, when you talk about East African community in terms of trade, even though Kenya went to London over the past few days and tried to sign a deal with the UK before Brexit happened, they've been very smart, in the Kenyans, by the way. they're trying to knock a deal of their own, then went to meet the Trump administration, also try to get another trade deal outside the EAC. Looks like a few other countries in the region are not too pleased with Kenyatta and his administration in trying to be smarter than the rest of them. So, but in terms of the post-COVID inclusive recovery, I think we'll need to break this down into regional basis, whether we like it or not, to really help us to ramp up on that basis. So what do you think the scope and the structure of this will be for East Africa?
I think that the view on trade will be partially regional, but I see different moves as well from countries like Rwanda and in Ethiopia as well. Because as Chiza said, it's going to be transport driven. Huh? You're going to get Ethiopia, Addis is already a hub. They're looking to do a little bit more there. I see that Rwanda has built a spanking new airport as well. They want to get into the action of the hub as well. So I think that they see themselves as positioning towards not only Africa and the free trade area, but also externally as well. So which is going to be important for expanding supply chains and that sort of thing. So if you look at Ethiopia for a moment, let's take Ethiopia apart and see that Ethiopia has Ethiopian Airlines, which is, seem to be weathering the storm of the COVID by replacing a lot of their passenger traffic with, cargo, and they fly all over the continent. They also are doing have an airline subsidiary that goes through Lobe in Togo, which is AirSky. So that sort of transportation network moves people and it moves cargo around, and that's going to be important. I also share Chiza's view in relation to issues relating to freedom of movement and trying to reduce the amount of restrictions to stop people from moving, because when people move, then you get integration in a fairly organic way, which you would normally get it if you put up all of these restrictive barriers. In relation to the difference between being within the AAC and outside the AAC, I see that sometimes in all regions you get that, people operate sometimes on a bilateral basis, even though they're within a group. And I think that there's a tension there, but I don't think it would be substantial if the benefits of being within the EAC is greater than going it alone at points in time. So I think that as a whole, you're going to see a mixture of more bilateral arrangements and also more multilateral arrangements in the East African region.
Thank you so much, Kelvin. I think one main point that we've seen so far on this webinar is that Africa will need to spend money moving forward. In the COVID period, we've seen the year running out, and into post-COVID, whether it is in social protection program in French-speaking West Africa or Nigeria for infrastructure, or in South Africa, where the public debt is also rising, and even in East Africa and North Africa, we can't take out of it. So we need more money, we need financing, and I keep talking about $130 to $140 billion financing gap between 2020 and 2023. So the question is, where will this money come from? So questions are coming through. Mosokwe, I'm going to ask you first. Some of the panelists are asking, the last page of your presentation talk about further borrowings by Nigeria. It looks there's a lot of room. But when you consider debt to GDP, the country is struggling with debt finances. So the question from this anonymous attendees, could you provide a better perspective of that slide looking at debt service to revenue? Debt, every country in Africa is going through it. Revenue shock, we're all going through it. But again, speak to Nigeria, which is a major economic hub on the continent.
Okay. Sorry, can you hear me, please?
Yes, very clearly.
Oh, okay. Yeah, thank you very much. Nigeria's debt service revenue is actually on the pretty high side. And as Akib had said, domestic revenue mobilization is quite important at this point, and the government realizes it at this time. And I've been making efforts over recent years to scale that up. We saw the raise in VAT earlier in the year. A few years back, we had the voluntary scheme, the tax, the VAT that was ended a few years back. So there's been that awareness. Yeah, so there's been that awareness to increase domestic revenue mobilization in the country. There's also this perception of hostile business environment, which is stifling business productivity and profitability, and is also affecting government revenues from tax. And even though the pace has been slow, there's been a bit of reforms in Akib's slide as well. Nigeria is one of the countries highlighted to have implemented some form of reforms, and we saw an improvement in our ease of doing business ranking over the past few years. So give and take, debt to revenue, there's still room for it. Looking at the debt to GDP, there's still room for it, but debt service to revenue ratio seems a bit slim. It's going to be challenging this year because of the oil price situation. We're still reliant on oil, but with time, if the fiscal policy, if the fiscal reforms that are being implemented by the government continues over the next few years, we should see an improvement. There's been attempts to diversify other sectors and improve export. Yes, we know that we're not so good with implementing, but the bottom line is efforts are being put in place to ensure that we're able to raise more domestic revenue, so we're not reliant on oil. So in as much as there is room to borrow, we have that liquidity concern to service future obligations, and that room to borrow would always be there with a caveat. That's why even though we're low risk, there's still some form of concern regarding our ability to service future debts.
In terms of how, thank you, Mushope. In terms of what the continent needs to do, okay, I think we have one quick, let me just look at this question quickly, which I think I'm trying to, the role of the African Union. Thank you so very much. Thank you, Adele Ryan. What's the expected role of the African Union to play to help support the post-COVID-19 recovery activities in the African countries? Who will take this among the participants aside Akib? You want to speak to that, Chidza? The role of the African Union in inclusive post-COVID-19 recovery.
Hello, can you all hear me?
Yes.
Sure. I think the expectation on the role of the African Union is to at least get or create a platform where cohesive cross-border policies can be established, especially with the discussions that we're seeing underway around rules of origin, sensitive lists, which could inhibit gains in certain sectors, especially agriculture, where we see quite a bit of protectionism around the region. And in, sort of, I suppose, standards and rules when it comes to trade and services as well is quite important, especially for economies in Southern and East Africa. So I think investors want to see the African Union basically mirror what we saw with the EU as it was being formed. It will be a multi-decade journey for the African Union, but at least to see definitive steps in that direction and harmonizing the rules of the game across the region will be important. And another area that I sort of alluded to earlier was the issue of stability, and it also relates to the kind of security and terrorism risks that we see throughout the region, where we would expect the groups such as the African Union, of course, there are missions such as AMISOM in East Africa, where we would expect the African Union to take a stronger role in helping to open up the trade arteries throughout the region. So yes, on a policy level, we do expect a stronger role of the African Union to mirror what we've seen with the EU, and of course, having a more private sector-led approach with targeted policies for specific industries that are relevant to local economies across the region. Of course, this is a mixed picture. and security stability. I think that's also a really important issue in the eyes of investors. And in terms of revenue mobilization, of course, I think that will be more on a region by region level across the continent.
Okay, we appreciate your intervention, Chidza. Thank you so much. Worth bringing the African Union to the table, midwifing the whole AFCFTA. Let me allow Akib Aslam from IMF to give us a round-up view of everything that he has heard and what are you taking on board. We're looking forward to the next review of the IMF Economic Outlook, African Department on the region.
Thank you, Boisson, and thank you also to the other panelists. I thought it was extremely interesting to listen to all of the views, especially region by region. It's interesting because we don't necessarily look at the continent in that way necessarily by region. We might focus more on, let's say, countries categorized by, let's say, resource intensity and slightly different elements, but the geographical region is obviously very important. And as you know, especially for the 54 countries in the continent, we have a country team for each, we have a team for each country, and currently they are in the process of actually evaluating each country step by step. So the way that we actually create, as I'm sure many of you know, our forecast for the region will be that it's a bottom-up approach. So that's one thing to emphasize. And the reason I emphasize that is because each country is, as many have noted, at very different points in, not just in overall development, but even with tackling this pandemic, differences in terms of their sectoral diversity. There's a huge number of factors that will actually make this a very difficult, let's say, exercise to evaluate, because as all of the speakers have said, this very much comes down to identifying engines of growth in the context of a number of very severe policy trade-offs and an environment where constraints are only actually probably going to get a little bit worse before they get better in that sense. So trying to deliver these growth opportunities while needing to consolidate fiscal positions, bringing debt back on a sustainable footing, is going to be very tricky. That's why 2021 does have essentially such large confidence intervals around it. And being able to sort of maintain or even restore macroeconomic stability while uplifting this longer term growth is actually obviously more urgent than ever. So I think it comes back to the, essentially, I would like just to echo the points that the panelists have mentioned, because we will be looking at exactly the same things in the sense of governance structures, social safety nets, the domestic revenue mobilization points that have been raised. These are all elements that are going to essentially drive the outlook at the country level and then at the regional level in that sense. And we're sensitive, just as actually I think it was Kelvin that talked about these event risks. We're sensitive also, Anwar mentioned this interesting point, which is very relevant as well, which is that the greater integration becomes in the region, the more susceptible, let's say, countries become to external shocks as well, to the extent that they can transmit across the region much more quickly in that sense too. So to the extent that for the moment, each country is wrestling with a very specific epidemic dynamic, and to the extent that that is compromising various parts of their economy, it's going to be important for us at the IMF to just take stock of all of these different elements when we essentially come to making these growth forecasts. This access to finance, and external demand, which the panelists have mentioned as well. I mean, to the extent that domestic revenue mobilization could be hampered by some sort of damage to the tax base as a result of these lockdowns and the pandemic, it's as the previous point mentioned, as you were just saying as well, Boston, about external financing, it really comes down to the ability for these countries to be able to access this financing. And I'm not just talking about emergency financing of the kind that the IMF has been given in our rapid credit facilities and our financing instruments. It really comes to actually choosing those policies that crowd in the private sector, which is still itself recovering, in a way that fosters this sort of medium-term growth, which is so essential. It's as you can tell from my answer, it's a bit difficult to say, but these are all the factors that we're going to be taking account when we're evaluating the region in each country. So I hope that helps. Thank you.
Thank you, Akeem. Thank you so much. I hope the new report is going to be a little bit bumpier than it was, looking at the recovery and what has been done so far. I want to say a very big thank you to my panelists, but let me hand over. Yes, I got a poll question earlier. Which regional economic bloc do you think will lead in Africa's recovery in 2021? What's the poll result? Do I have my back-end team with that? Okay, here we go. It looks like a tie between West and East Africa. North Africa got a green. Okay, looks like those are the winners and the losers. So if I go for blue line to show that that's the winners, and the orange line looks like the losers. Oh, okay, I shouted you to all panelists, East Africa. Okay, it looks like North Africa got 18%, Southern Africa got 10%, West Africa 36%, and East Africa. East Coast, West Coast, thank you very much. The second exit poll is, will all the members of the African Union unite in implementing the AFCFTA? That's a big conversation moving forward. Yes or no? Do that in 2 quick seconds while I allow Agnes Gitao, our partner at GBS Africa, to give us just a minute or two of the round of comments or remarks. Agnes, please.
Thank you. Thank you very much, Bosun. And I'm so grateful to all our speakers, Chidza, Mosope, Akib Aslam, Kelvin, Anwar, Atef, and our partners, Damilola and Frontier Africa Report. I think we've heard that we have challenges ahead. Like we started in 2020 with us political uncertainty, we have issues on external financing. And I think the message from this conversation for me is, where do we go from here? I think COVID-19 showed that Africa can get its act together. We must work together as a region. And again, I think as we heard from different regions, that Africa is not a country, because we are all sort of in different levels in our development. So it's going to be a tough 2021, but it can't get worse. It can't get any worse than we had in 2020. I think going forward, as we spoke, is how do we ensure that we have political stability so that we can give investor the confidence? How do we diversify our economies so that, and also how do we diversify? I think one of the points that came out is how do we mobilize finance, both domestically and foreign finance? How do we diversify our sources of financing so that we can continue to build our continent? And another conversation that came up is the importance of social stability, the politics, the SMEs, as Atef highlighted. We cannot grow if we don't focus on SMEs and providing access to finance for SMEs. So mine really is to thank each one of you and to thank you for your time. I promise we'll provide a report. We have our team taking notes and making sure that we have a detailed report to be ready for you, hopefully by the end of the year. If we don't get to see you again, mine and my team is to wish you a very Merry Christmas and probably a very hopeful 2021. And we do hope we can come again to sort of take note and sort of take a stock of where we are in 2021. So again, thank you Chidza, thank you Mosope, Akib, Kelvin, Anwar, Atef, Damilola, and Boston. And thank you to each of all the participants that stayed with us despite running a little bit late. So Asante.
Thank you. Thank you, Agnes. Thank you so much. About 130 participants are still hooked up to this presentation. So thank you very much. Damilola, I was to ask you a question earlier. You seem to have escaped that, but I'm going to hang that for another day. Will all the members of the African Union unite in implementing the Africa AFCFTA in 2021? How do you vote? Yes or no? Bring that to me very quickly. Damilola, how do you vote? I'm going to give you that last opportunity.
I'm a very strong believer in Africa, so I vote yes.
A strong believer in Africa, you believe it. I'm sure everyone will give us a yes vote. I have a yes vote here. Mushokwe, thank you so much for your time. Chedza Madzima, thank you so much. Okay, now take this away. No. Okay, will all the members of the African Union unite in implementing the AFCFTA? Yes, got a 42, 60% for a no. No is the answer. No is just the answer. No. Thank you, Kelvin from East Coast. Sanura, thank you so much from Paris for covering French-speaking West Africa for us. Akib Aslam, thank you so much. Whenever you get back to Washington, we appreciate your time. give our best regards to them at the IMF. Thank you so, and for Dr. Atef Al-Shabri, thank you so much in absentia for being part of the program. Our good regards to you at the World Bank and of course to the Egyptian government. Thank you so much, everyone. Have a great time, and I will see you again. On behalf of Vetiva Capital Management, one of the leading investment banking and licensed securities and financial services trading firm in Nigeria, an active member of the market, and GBS Africa as well, involved in a whole lot of Pan-African support in terms of solutions to economic and business issues on the continent. And for us at Frontier Africa Report, bringing all of you together under the news platform. Thank you very much. Have a great Tuesday, have a great Wednesday, and see you next time. Bye for now, everyone. Thank you. Bye-bye. Thank you, Akib.
Thank you very much.
Thank you, Anwar and Agnes. Mushokwe, thank you very much. We appreciate your time, everyone. And to all our delegates, thank you very much. Thank you. You want to interact? We have a few minutes still within the room for everyone to speak. The line is open. Please, everyone, you can unmute yourself on your system and ask informal questions. Thank you.
I maintain that I believe in Africa, and I maintain my yes vote. Thank you.
Yes, thank you, thank you. Yeah, we're gonna move the votes to a yes. We'll get a yes vote. We'll get that unanimous vote moving forward. Thank you, everyone.
Look, Damilola, I think people are being a little bit more realistic. As we speak of ACFTA, Nigeria's border is close to between Nigeria and Benin and Niger, right? So how can we start trading in January 2021 if I mean, regionally, we are still having issues of integration. So I think that the response is a little bit maybe pessimistic, but looking at the matters on the ground.
I think the African Union has that role to play as well to ensure compliance. It's not just about signing and ratifying the AFCFTA. It's also trying to encourage countries to comply with the provisions of that. I think that's also a responsibility the African Union would have to play. Once you see barriers like this in place, just try to look for a way to dissolve such unpleasant situations so that it doesn't affect trade either way.
I agree with you. I think the way it's going to take off will be more like a plane. You know, you just fasten your seatbelt. Well, it's going to be a little bit topsy going through. You understand? And then until it gets to an altitude, I'm not too sure it's going to be a whole smooth takeoff, as it were. So let's just all fasten our seatbelts on the 1st of January, 2021, and expect a few shaking the cabin. Coffee and tea will be served later, folks, everyone. So just sit back and enjoy the flight that we'll hear from the cockpit from the African Union and from Ghana, where Wamkele is. But again, everybody's going to behave themselves. Everybody will take their seats, and then you can move around the cabin and feel free when the flight is on. But for now, it's going to be a bit of a shaky takeoff. That I so much believe. But the most important thing is for us to take off.
I agree with you. The journey of 1,000 miles begins with one step. So let's take that step and let's see how it goes. Thank you so much, everyone, once again. Chetsa, Kelvin, Boazin, Agnes, Moshope. Thank you very much for the high quality conversations. Thank you, and bye-bye.
Thank you. Bye-bye.
Thanks, everyone. Have a brilliant day.
You too. Thank you. We'll see you some other time. Anoa, thank you so much. We appreciate your time. Kelvin, thank you so much, sir. Thank you.
Bye. Bye-bye. Take care.
Thank you.